Welcome to This Explainer. Today, we are going to unpack a massive transition that's happening right in front of us. We've got a complete, well-explained, step-by-step breakdown of the shift from traditional fiat banking into this wild new era of AI-driven digital wallets.
So imagine you just woke up today from a 31-year coma. Richard Teng, who's the co-CEO of Binance, actually posed this exact scenario. And the biggest shock wouldn't just be smartphones or the internet, it would actually be realizing that the physical brick-and-mortar financial institutions we all grew up with are rapidly dissolving.
To really grasp this shift, we've got a structured, step-by-step agenda for you today. 1. The legacy banking trap. 2. The crypto blockchain upgrade. 3. AI's native currency. 4. Navigating risks and regulations. And finally, Step 5, your digital wallet future. Let's dive right in.
All right, Step 1, the legacy banking trap and the flaws of the old system. Think about traditional banking constraints for a second. Markets literally close at 5 p.m., which means you're stuck carrying massive liquidity risk overnight. Settling a trade? That takes 2 full days. And if you want to send money across borders, you're looking at eating a staggering 6 to 7% in remittance fees. Now contrast that with modern crypto architecture. We're talking 24/7 continuous trading, instant atomic settlement, and fees that drop to just a tiny fraction of a percent. It's a completely different ballgame.
And the human cost of that legacy system is just staggering. Right now, 1.4 billion people globally remain completely unbanked. Why? Well, simply because traditional financial institutions find serving them way too expensive. So the structural constraints of old banking literally leave over 1 billion people completely locked out of the global economy. That's absolutely wild.
Moving on to Step 2, the crypto blockchain upgrade and how tech actually fixes finance.
This brings us to a true game changer, and that's atomic settlement. Instead of waiting out that risky 2-day period we just talked about, trades and transactions clear instantaneously, utilizing immutable blockchain technology. Because the ledger is unchangeable and immediate, that whole messy, expensive back-office process of reconciliation we see in traditional banks, it becomes completely irrelevant.
What's really fascinating here is how the old guard is reacting to this superior technology. Wall Street giants used to be massive critics of digital assets. But look at BlackRock's CEO, Larry Fink. He actually admits that the more he understands it, the more he is turned into a keen supporter. From BlackRock to JP Morgan, traditional titans are pivoting hard to embrace this exact crypto infrastructure and things like tokenized deposits. They simply can't ignore the undeniable efficiency anymore.
And it's not just everyday users making the upgrade. Massive corporate treasuries are actively adopting stablecoins for global transfers. Just think about the ripple effects here. Instant cross-border transfers mean highly predictable vendor payments. But the real magic, that's the lower capital holding requirements. If a multinational company settles payments instantly, they don't have to leave hundreds of millions of dollars sitting idle in transit for 3 days. It unlocks incredible capital velocity across their entire organization.
Okay, Step 3. AI's native currency and the automation of wealth.
So agent trading completely automates this whole process. It works in 3 simple steps. First, you set your strict risk parameters. Second, your AI agent seamlessly executes trades 24/7 while you sleep. And third, everything settles instantly via stablecoins. It functions exactly like your own personal, hyper-efficient automated trader that literally never takes a day off.
Now, you might be wondering, why does AI even need crypto? Well, traditional credit cards are just way too slow and expensive for continuous microtransactions. If an AI agent is making hundreds of tiny data purchases or split-second trades, a 3% traditional processing fee completely breaks the model. Instant, low-cost stablecoins provide the exact frictionless financial rails that AI inherently requires to operate.
Let's head into Step 4, navigating risks and regulations, and setting up guardrails for the future. Look, whenever money evolves, bad actors are gonna follow. In traditional finance, we see massive scams, like victims losing millions of dollars to callers manually impersonating politicians or bank officials. And crypto definitely has its own prevalent scams, often using sophisticated tech to target victims. The core takeaway here is pretty simple. Protecting your money requires extreme vigilance and strong digital safeguards, regardless of whether it's stored in a legacy bank or on a decentralized protocol.
But here is the fascinating twist where the technology actively fights back. $7 billion.
Last year alone, Binance utilized over 100 sophisticated AI models to analyze on-chain data, and they prevented nearly $7 billion in potential scams from hitting their users. So the exact same technology powering the ecosystem is being weaponized to track and halt fraudulent activity in real time. How cool is that?
For this to actually work sustainably on a global scale, regulators have to walk a tightrope. Attempting to legislate for zero risk is a fundamental mistake, because if you regulate for zero risk, you effectively mandate zero economic activity, which severely stifles technological innovation. The actual goal is smart regulation. We need to implement strong guardrails and transparently protect user assets while simultaneously fostering real utility and growth.
Finally, step 5, your digital wallet future and preparing for the shift.
So, what does this all mean for you? Well, soon you'll likely leave traditional bank accounts entirely behind in favor of a unified Web3 wallet. Just imagine a single digital hub that receives your salary directly in stablecoins. And from that exact same app, AI automatically balances your investments and instantly pays your global bills. The traditional bank branch gets entirely replaced by a financial super app sitting right there in your pocket.
As you prepare for this evolutionary shift, Teng's most crucial advice is simple. Do your own research. Never blindly trust the hype, whether that hype is coming from a legacy institution or some new crypto startup. You are the master of your own money and your own knowledge. You've got to focus on understanding the real utility, the technology, and the underlying mechanics behind exactly where you allocate your wealth.
As we wrap up this explainer, I want you to consider just how fast our financial world is evolving. Ask yourself a provocative question. Will the next generation even know what a traditional bank account is? Or will they view it exactly the same way we view a fax machine? The infrastructure for this massive shift isn't just coming, it's already being built right now. The only question is, are you ready to adapt? Thanks so much for joining me on this deep dive into the evolution of money, and as always, keep learning.